Good morning. How to build a real estate portfolio without tax returns. Well, for many real estate investors, tax returns are not a reliable reflection of true income. With aggressive write offs, depreciation, and legitimate tax strategies, often reduce taxable income on paper, making it difficult to qualify for traditional mortgage is. And the good news is you can still build a real estate portfolio without tax returns if you understand how alternative lending works. And as a mortgage broker, my role is to structure financing around cash flow, around assets and deal fundamentals, not just W-2s and tax transcripts. So why traditional loans fall short for investors? Well, conventional lenders rely heavily on your 2 years of tax return and the reported income, which often is the adjusted gross income. And then you can calculate your debt to income ratios from there. And for self employed borrowers and investors, this often creates unnecessary friction. Fortunately, portfolio and non QM lenders underwrite deals differently. So here are some key loan options that do not require tax returns for income proof. First is DSCR loans, so debt service coverage ratio loans. And DSCR loans qualify borrowers based on property's income, not their personal income. And if rental cash flow covers the mortgage payment, tax returns are typically not required. And these are best for 1 to 4 unit investment properties and long term rental portfolios, but also investors scaling multiple properties simultaneously. Number two, there's bank statement loans as well. So instead of tax returns, lenders can review 12 to 24 months of personal or business or both bank statements to calculate your income. And who's this best for? Well, self employed borrowers are usually the number one category there, but also business owners, as well as contractors and gig workers. And number three is asset based lending. And really, qualification is driven by liquid assets, your reserves, and overall net worth rather than income documentation. And this is best for high net worth investors, retirees, or investors repositioning capital. So, number four is portfolio and private lenders. These lenders keep loans in house and can customize their underwriting guidelines around the deal itself. So, these are typically best for unique properties, for mixed use assets, or investors with complex income. So let's talk about how to strategically build a portfolio without tax returns. Well, focus really should be on cash flow positive properties. So keep clean operating statements and leases, make sure everything's documented, but also maintain strong reserves in your bank account. And work with a broker who understands investor underwriting. And you can use DSCR loans to scale instead of requalifying personally every single time. Now let's talk about why working with a mortgage broker really matters. And banks sell products, and brokers design strategies. And as a broker, I match your investment goals with the right capital source, whether that's DSCR or bank statement or asset based lending. So your tax strategy doesn't limit your growth strategy. And here's the final thought for the day. Not having tax returns does not disqualify you for building wealth through real estate. It simply means you need smarter loan structures and different lenders, as well as an advisor who understands investor finance. Now, if you want to scale your portfolio without traditional income documentation, this is exactly what I help investors do every day. Please think of me and visit my website, buildraponline.com. Love to talk to you more about your scenario and how I can help. Take care.